Good afternoon, everyone. This is Joe Henches with Beyond the Chart, and happy fall to everyone. Today is the first day of fall, and here in Plano, Texas, can't wait. It has been a while where we had some beautiful, cool weather, and we were down about 63 degrees or lower this morning, and it was wonderful. So we are enjoying it. Anyway, let's get started with the market update here for Monday, September 23rd. We're looking at the Dow Jones Industrial Average, and right now you can see we had a pullback on Friday. We were down 185 points. That's pretty healthy pullback. We kind of pushed up to a little bit of new highs, on Wednesday. Then we pulled back. So we haven't gotten confirmation of staying above this point here, the late July, August 2nd point, like we have on a couple of other indices. But we'll have to wait and see. I mean, we're still got the trading is still above the 10 exponential moving average. The 10's above the 50. It's trying to turn up, but again, I'm not seeing anything that's really dynamic. I'm not seeing anything dynamic here with the Dow Industrials. It's nothing that's kind of giving me an indication of, what's really happened, like we see on a couple of other things. So let's move on. Let's look at the S&P 500. S&P looks a little stronger. Of course, the Dow was one of the weaker ones. The S&P looks stronger. The push in July was to higher. Our last push was to even higher highs. So this looks good. The numbers you're seeing here relates to an Elliott wave count that some guys I kind of follow on the internet have got, and they kind of make sense to me. Still a little unknown as to whether this is really the fourth wave of this big push that's been going on since late 2011. But anyway, what we've got here is we do have a little bit of a five-wave count working. We got 1, 2, this intraday pullback, a move up 3, and then this is 4. So we're looking at another push higher here, 5. And then this is either, I think this is going to be another wave 1 of the final wave 5. But either way, you're going to get a pullback. You're going to get a wave 2 pullback, or you're going to get a top. Wave 5 is going to top out. So we're going to, so we need to be kind of wary here over the next few days. I think we're going to get, we could get a little bit more of a pullback, then get a rally. And we might get some non-confirmation on that rally. So if we do, we're going to have to be looking. If we're long, we're probably have to be really wary about staying long. So it's a little bit of a heads up. The New York Composite, could easily pull back here to this trend line, which is the top. And again, I talked about this being an ascending triangle, so it still looks bullish to me. And there's no guarantees. I mean, these things could fail. Could pull back all the way down into here and drop down. But right now it looks bullish. But we could also still get a little bit more of a pullback before we turn higher for another push up. Let's see. Let's look at the Nasdaq. Nasdaq again has always been the stronger one. The July push was stronger than any of the other indices. This push this last couple of weeks has been stronger than the other industries. Did not get the pullback that to the degree that we saw in the Dow and the S&P 500 here on the Nasdaq. So it continues to look good, and again, which reinforces the fact that we need to be looking at individual stocks, because just because the Dow's doing something or S&P's doing something, yeah, that market sentiment and that market activity is going to weigh on it. But some of these individual stocks are still really moving very dynamically. So let's take a look. Okay, let's move into gold. I'm going to take a look at gold, silver, and oil real quick. Now, gold, just like gold and silver, both had this huge move on Wednesday. And we've had a pullback since then. It's really to be seen as to whether or not, I think Monday's going to tell the tale. I mean, if we get a close below this close here, Friday's close, it's not as bearish to me on oil. But if we gold, I'm sorry. If we turn around and pull back up and get a close above this high, Monday, Tuesday, especially Monday, And I think it's a real good chance that gold could continue this upward thrust that it made on Wednesday. So we just have to wait and see. Let's take a look at silver. And again, when I say gold and silver, I'm looking at the ETFs, GLD and SLV. Silver SLV looks almost identical to gold here. Same kind of pullback. Again, it closed down below this 10 exponential moving average, which to me is, again, a caution sign. If I get a close below it, then, that means to get out of any longs for sure. U.S. oil, similar kind of thing. So a lot of the asset type plays had the big pop on Wednesday because of the Federal Reserve announcement, and then they've sold off since then. So U.S. oil, USO, which is the oil ETF, closed below the 10, and then got a confirming close below that. So it does not look bullish in here. Although it is right here at the 50-day moving average, I mean, I'd have to see a turnaround and close above the highs of the last couple of days to think that this thing is still going to push higher, which it could do, but right now it doesn't look like it. Okay, let's look at some other market indices. We haven't, ETFs that kind of tell us how the economy is doing that we haven't really looked at in quite a while. This is the financial ETF, XLF, and looking to see, we got the push which kind of confirmed the market indices here in July, but we haven't pushed to new highs here in this month. So we're not getting confirmation with the banks and the big financial institutions in this index yet. So that's a little bit of a cautionary sign in here that this thing hasn't moved to the new highs. So that's one thing I'm kind of taking note of. Now, again, we've still got the moving averages of 50s above the 200. The 20s below the 50, but it's done that before temporarily, and then it pulls back up. But again, it's a little bit of a caution here. Let's see. Let's look at the home builders. Now, the home builders, again, they have not, they went to the new high in May, did not go to a new high in July by any means. So we're starting to get a little bit of this non-confirmation that maybe the economy really was weakening. Maybe the home situation really was weakening. Now, all of a sudden, it started to break out, has broken this downward trend line of the last, 3 months, 3 to 4 months. And, then got this big pop as the interest rates now look like the long-term interest rates are pulling back and going a little lower. And the Fed's going to hold, do its part to hold the interest rates down. So the home builders are popping here. Now they've pulled back just like everybody else, all the other markets have pulled back. But this looks like it's starting to turn up and maybe give a shot at running. We get to new high here, then all of a sudden we're going to get this confirmation again that things are starting to get back in sync. Let's see, there was one other I want to take a look at, the semiconductors. Let's see, where are they? I know they're right in front of me, but here we go. I got it right on it and wasn't seeing it, so sorry about that. This is semiconductor holders index. So now the semiconductors have pushed to the new high in July, confirming in sync with the indices, and they have pushed to new highs in September. So that's showing strength, which again, semiconductors, the manufacturing, autos, a lot of that type of thing. So we've got the semiconductors in sync and looking strong. We've got the home builders turning up now and breaking a downward trend line, which is a good sign. And then we need to get the financials to reaffirm that the direction is still solid and upward. And then we've got a lot of these in sync. So a little bit of information, additional market information insight there. And we'll see what next week holds as we get into all of the government negotiations about debt limits and shutdowns. So that's it for Sunday. Have a great week, and we'll talk to you tomorrow night.